dangerous drugs, injuries, and abuse. Across the state of Alabama, the attorneys, proudly sponsored by Hollis, Wright & Couch, are here to serve you. Your tough legal questions answered by our experts. The attorneys with Josh Wright from the Hollis, Wright & Couch Law Firm and host David Lamb.
Hello and welcome into the attorneys. Appreciate you spending your Sunday evening with us. For the next half hour, we're going to talk about a topic, taxes. The tax man, he does come. What can you do and what are your rights? That's our topic of conversation. If you'd like to join in, you can call, text, email. That information will be displayed on the screen throughout the evening. And leading our conversation, as he often does, Josh Wright of the firm Hollis, Wright & Couch. Good to see you, sir.
You too. Talk about a relevant topic. A lot of folks getting ready to file their taxes right now. This is a perfect time to do this show. And, you know, with 70,000 pages out there in the tax code, you need to get yourself with people that know what they're doing, and that's exactly what we're going to do tonight. Brad Howell with the Palmer, Meadows, and Howell firm here in Birmingham is an expert in this area, so we brought him on to answer questions from what are the percentages of those that get audited to how do you prevent an audit to what do you do if you are audited? I mean, you name it, we're going to be able to talk about those topics tonight. So, Brad, thank you so much for being on.
Not a problem.
Today.
It's a pleasure being here.
Start us out with just a little background about your practice and how you kind of come into this practice as an expert in this area.
Sure. Primarily what we do is tax debt resolution. Essentially when an individual or a business entity has accrued tax debt and needs to resolve that to get it on an installment agreement or an offer in compromise or some other plan where they can reasonably pay that off over an amount of time, we assist with doing that. We also assist taxpayers with kind of upfront planning to ensure that they're basically abiding by all the tax laws and that they're avoiding any unnecessary taxes by choosing the correct business entity, by paying quarterly estimated taxes, avoiding penalties, things of that nature.
So let's start it out where I think folks would want to know what percentage of consumers, individuals out there are getting audited per year?
Well, overall, it's a very small number, and this number takes into account both individual returns as well as corporate or LLC returns, and that is around 1.5% of all filed returns. Now, obviously, there are some things that may trigger an audit that could increase your chances of being audited, but if you're just talking about the general numbers, around 1.5% are audited each year. What
are the things that can trigger an audit or make it more likely that you could be audited?
Well, there are a variety of things, and in all honesty, that can change from year to year. The IRS will look at specific entities or specific types of businesses sometimes with a little more scrutiny. More recently, we've seen a lot of nonprofits being audited more than usual because they suspect that there's abuse in the system. But just as far as your average taxpayer or your average business, a lot of times if you itemize deductions and you're claiming a large amount of deductions, especially to the point that you're claiming a loss for that year, that can raise the chances of being audited. And especially if you're operating a business and for the past 3 years in a row you've claimed a loss, that can indicate to the IRS that it's not a business that should be claiming a lot of deductions that they are, but rather a hobby. So those are some of the main things that we see coming up that increase the chances of audit for an individual.
Now, if you're audited, is there jail time as a potential? I mean, is that something, if you get caught for doing something or not reporting something, is jail time guaranteed, or are there generally just civil penalties? How does that work?
In general, the IRS and the Department of Revenue just wants their money. In most instances, there are not going to be criminal charges brought, and there's a specific reason for that. That is that the IRS has to prove, or the Department of Revenue has to prove, that there was an intent to evade taxes. So merely failing to file a tax return doesn't actually equate to an intent to not pay taxes. Similarly, if you owe an amount that, even if it's a significant amount that's owed, even if you did file your returns, it's still not necessarily intent to evade taxes. That's a question we see a lot because you've got a lot of high-profile celebrities, people like Willie Nelson and Pete Rose, Darryl Strawberry, things of that nature, that you see them in the headlines, and that's kind of a deterrent by the IRS to get the news out there to make people aware that these criminal charges are possible, but in most instances they don't apply.
You even hear that term with the stars, they could face jail time. Does that basically mean if they don't pay up, they could go to jail, basically?
Right, and you see in a lot of instances, for example, Willie Nelson had a album that he produced and raised enough proceeds to pay the taxes off. Yeah. So in that instance, he avoided jail time, even though there was a possible sentence for that.
A question that we've got here, will the IRS, will they take my house, car, or other property?
They have the legal ability to do so, but the question is, will they do it? Generally speaking, you're going to get notices from the IRS or Department of Revenue saying, this is what you owe, please pay us by this date. If you continue to ignore those notices, or maybe they're going to a wrong address and you've never seen them, eventually your file, the assessment will get sent to collections. And at that point in time, if they can't get in contact with you, they will proceed with those type of collections actions. Generally, we see wage garnishments and bank levies as the first actions they take, with seizure of real property and personal property being something as a more of a last resort.
I've heard that oftentimes if somebody has moved, the first notice that they get that there is a past due amount or an arrearage related to their taxes is there's a garnishment at their place of employment. Is that something you see?
Right, that's a common problem, and usually how that occurs is if an individual has not filed taxes in a while, the IRS and the Department of Revenue, they go by the last address they had on file for your return. So if last time you filed, let's say it was 2006, you moved in 2007, they're going to be sending notifications to that old address.
What is the trigger for the Department of Revenue to know that this individual is supposed to file a tax return? I mean, is it the fact that they filed tax returns for the last 20 years? I mean, if you filed tax returns for 20 years and then 3 years in a row you just decide, I'm not going to file tax returns right now, what triggers hey, this person needs to be paying taxes? I mean, is there some check on the system? Is it based on Social Security numbers? I mean, how does that work?
Usually what occurs is anytime an individual earns wages, there'll be a wage earning statement either in the form of 1099, W-2, or similar form that is reported to the state and federal governments, so they're aware that you have income. Gotcha. If they notice that the amount of income is such that it's likely that you would have owed taxes, then they're probably going to initiate an audit. Now, let's say for 2004 is the first time you received wage earning statements, and for previous years you didn't receive anything. They may still open up an audit for those years just to see what it is that you earned and to make sure that you don't owe anything.
How far does an audit go back? That's a question that I get quite a bit. How far will the audit itself go back if the IRS wants to come in and audit you?
The audit can, in theory, occur at any time. One of the big problems, though, is that the IRS generally keeps financial records for 10 years, and the State Department usually keeps them for 7. So after that span of time, they don't have enough information to really conduct an audit, usually. The real time limitation that comes in is the amount of time they have to enter an assessment or to tell you how much you owe. So they can audit you to determine how much you owe. And sometimes, for example, in the state of Alabama, if you underreported by more than 25%, they can assess you up to 6 years after that return was filed. But the general rule of thumb is that they cannot enter an assessment 3 years after the return was filed.
So from a taxpayer's perspective, how many years of tax returns should you be saving?
I would definitely say at least for 6 years. The IRS has a general rule of thumb where they won't go back any further than 6 years, just based because statute of limitations for many criminal charges is 6 years. But anytime you're dealing with specific financial documentations like relating to an asset that you own, you definitely want to keep that for the life of the asset. And in instances where maybe you trade in that asset like a vehicle for a new vehicle, that may basically factor into the basis you have in that new vehicle, and so you'll want to keep documentation of both assets at that point in time.
A question we've got here, should I be paying quarterly estimated taxes?
It ultimately depends upon what type of income you're receiving. If you are, for instance, an independent contractor who's receiving a 1099, obviously taxes aren't being withheld from your wages. So you're receiving a gross amount and you need to be paying that in on a quarterly basis. Even if you're a W-2 employee, if you have other sources of income that may be a 1099, you may need to pay quarterly estimated taxes. And the general rule of thumb there is that if you anticipate you're going to owe at least $1,000 in federal taxes as an individual, or $500 as a corporation in federal taxes, then you have to file quarterly estimated taxes. And for the state, that threshold is $500 for both individuals and businesses.
God knows his stuff. This is why we bring experts on the show right here. He's well above you and me, buddy. Trust me.
I'm trying to keep up. A couple of more segments remaining. Would love to hear from you. Call, text, email, get those questions in. You can also find the firm Hollis, Wright & Couch on Facebook and Twitter. The tax man's coming. You better be ready. We're arming you with information when the attorneys come. Right back.
I'm Josh Wright with the law firm of Hollis, Wright & Couch, and thank you for watching The Attorneys on Alabama's 13. Now, we hope you, a friend, or a loved one never need legal counsel for a case. But if you do, The goal of this show is simple: provide answers and legal counsel when you need it the most. Now, your call to the show is free, so if you have questions specific to this show or related to other civil legal matters, call, email, or text us to talk with one of our lawyers. You can also follow us on Facebook or Twitter to learn about important legal news that could affect you or your family. Or simply contact us by going to alabamas13.com and click on the attorney's link. Now, we know your time is valuable, so thank you for spending it with us and for watching The Attorneys here on Alabama's 13.
Welcome back into The Attorneys, talking about taxes and knowing your rights, helping us understand that. We appreciate you being with us. You can call, text, email. That information clearly displayed throughout the program. Ways for you to be a part of this conversation. Talking with Brad Howell of the firm Palmer, Meadows, and Howell. Brad, if say a tax bill, the debt is $10,000, what is the likelihood of settling for less than that full amount?
Well, there are a variety of ways that you can reduce the total debt that's owed. Generally speaking, though, when you hear the term settling the debt, you often think of, well, if I owe $20,000, can I pay them $10,000 and have this just completely wiped clear? Right. The answer to that is it depends. Essentially, what we have to do is we have to look at the financial situation of the taxpayer and determine whether or not they have the means to pay this entire assessment over the collectible lifespan of this debt. Okay. And essentially, we assist the taxpayers with preparing Form 433A, which is something that the IRS uses, or the C41E, which is what the department uses. Essentially a collection information statement that details what their monthly income is, what their monthly expenses are, what their equity is and assets, to try to determine if they can settle this debt. Now, obviously not everyone qualifies for that, but there are other means such as penalty abatement, as well as if you have a situation where a spouse is not liable for a debt, but they filed a joint return, had no knowledge of it, you may be able to get innocent spouse relief where you're completely cleared of having any liability for that debt as an individual.
What about bankruptcy? I have heard that if somebody files bankruptcy because of a tax debt they have, the tax debt is not wiped out through the bankruptcy. Is that accurate or am I incorrect?
It would depend upon the type of tax debt. Now, a lot of sales tax, withholding for employees, those are considered trust fund taxes that the business had a responsibility to immediately turn over, and those cannot be discharged in bankruptcy. But for income taxes, those can be discharged. Even if they're not able to be discharged, you can set them up in a payment plan in the bankruptcy proceedings so that you're paying it off over time. But if you want to completely discharge the debt, there's some general rules you have to be aware of. You have to make sure that the debt was, the return was filed, or the due date for the return was filed at least 3 years ago, that the return was actually filed at least 2 years ago, and that the assessment that was entered was at least more than 240 days ago by the IRS department.
If somebody's feeling overwhelmed right now watching this show that they have a tax debt that they owe, what do you recommend they do? Do they contact guys like you and let y'all evaluate their circumstance?
Well, I think the first thing they obviously need to do is take a deep breath. Anytime a federal or state agency comes after you, there's a little bit of tension and apprehension there. But just realize that everything is fixable no matter what stage you're at, and definitely need to contact some sort of professional, whether it be an accountant or attorney, to kind of guide you through the process, because as with any government agency, there are lots of regulations, lots of rules, and it can sometimes be a maze to try to navigate. So having a professional there to assist you with that is definitely a benefit to the taxpayer.
Now, does it cost the taxpayer money to come talk with you guys initially? How does that process work generally?
All of our initial consultations are free because we would, first of all, like the individual to come in and meet with us, get to know us in person, because there are a lot of national companies out there that claim to be able to reduce debts or to settle debts for you, and they're not really always in the best interest of the taxpayer. We've seen a lot of them that have had class action lawsuits filed against them. They've gone through bankruptcies, had criminal charges brought against them. So you want to make sure you're dealing with someone who you know and be able to help them out, and that's what we want to do. In addition, there are some times where it's a very basic problem that possibly the taxpayer could fix by themselves. So there's not really a need to involve an attorney or accountant. In those instances, we do like to give general advice to help out the taxpayer. But then there are some instances in which we would definitely advise a professional to get involved.
Yeah, do you guys have accountants that work with you or kind of alongside you to work through this issue, or do the lawyers handle most of that stuff?
We handle, of course, all the negotiation process, any filings of appeals and things of that nature. If a taxpayer does need an accountant, we've worked with several throughout the state that we can refer them to. And a lot of them are sort of specialized or have focused on filing past due tax returns, doing forensic accounting, and a lot of the stuff that we would need in order to get these tax debts resolved.
Take a deep breath. That's the one thing I learned from this show. That's a good thing. That's a good thing.
And he said it so, sometimes whenever the IRS comes after you, you get tense, you think?
Yeah.
Yeah, I think so. That message will get your attention. A question here from a viewer. I disagree with the amount that the government claims I owe. What can I do?
Good question.
Yeah, a lot of times, people will get the paperwork from these agencies and it says you owe this amount, and they think, well, how did they calculate that and what can I do? It ultimately depends upon where they're at in the assessment and the collections process. Obviously, the earlier you respond to these notices and the earlier you get information or documentation to them, the more easily things are going to go, the more efficient the process is going to be, and you have a higher chance of getting it resolved earlier on. Even if you're later on in the process, right before they begin collections, they'll send out a final notice. The IRS sends out a final notice of intent to levy, and the department sends out a final notice before seizure. That will give you either with the state 10 days and with the IRS 30 days to respond, and you have a chance to appeal at that point as well. So all along the way, there's usually some means of resolution where you can challenge the debt that you owe.
And, they can make a mistake.
Oh, definitely. You see a lot of times where the assessment has been entered because the taxpayer didn't get the documentation to the auditor, right, or the taxpayer is just not very knowledgeable about tax laws and doesn't know what to get to the auditor. So in that type of instance, the auditor or examiner has to enter in an assessment based upon the information they have. Right. And when they don't have enough information or documentation, it does end up being inaccurate most of the time. Mm-hmm.
Another reason to come talk to guys like this, just to make sure that you're on top of it and you know that you're paying what you're supposed to. I have heard, don't know this to be fact, but I've heard that a vast majority of all personal income tax returns are paid out by the state and federal government within a 3-week period is from the time they're filed. Is that accurate or is that inaccurate?
Yeah, usually the IRS will get it done within 21 days, and that's regardless of whether it was an electronic filing or a paper filing. Now this year may be a little bit of an issue because with the new tax regulations that they've passed for 2013, there is some delay in certain types of returns that are being filed, so you may see a delay in that regard. And the State Department of Revenue, they obviously have fewer resources than the IRS to get these returns out, so it may take a little bit longer with the State Department of Revenue, and usually they're working on ways to get those refunds back to individuals quicker. One thing that they've recently implemented is basically kind of a debit card that you can get that they will send you that has your refund on it. And they're indicating that will be a little bit quicker, especially than mailing out the checks. It'll be basically like an electronic transfer.
One thing I want to talk about after the break, big ticket items of changes in the code this year that may slow the process down a little bit, but that could be advantageous for consumers.
Good. After the break, we'll pick it up right there. We'll step aside, second break. Coming up, the final segment of the attorneys in our conversation on taxes. Here's how you can join us. Call, text, email. Find the firm of Hollis, Wright, and Couch. If you search that term on Facebook, and on Twitter, it's Hollis_Wright. Stay tuned. We're coming right back.
I'm Josh Wright with the law firm of Hollis, Wright, and Couch. And if you've ever served on a jury, you may have wondered why there are gaps in the evidence that you're given. In tonight's Legal 4-in-1, we're answering the question, is there insurance to pay that verdict or not? Know this, just because the lawyers never mention insurance in the trial doesn't mean that there's not insurance to pay a verdict in the case. Now, Rule 411 of the Alabama Rules of Evidence states the following. Evidence that a person was or was not insured against liability is generally not admissible or allowed to be discussed at trial in front of the jury. Now, the reason for that is that a jury could award more money in a case if they knew on the front end that the defendants had insurance to pay for it. But the reality in our state is this. In almost all lawsuits that get to trial, insurance is there to pay judgments awarded by the jury. For example, all automobiles in Alabama are required to have liability insurance. Coverage can range from $25,000 up to $1 million in those cases, and in theory, all car crash cases that get to trial should have insurance available to to pay any verdict awarded by the jury. Trucks have to carry more than $750,000 to up to $5 million worth of insurance. Unfortunately, you'll never hear that during trial. Even in medical malpractice cases, the doctor has liability insurance to help pay a judgment. Now that's something you won't hear during trial because the rules don't allow such testimony. Yet almost all judgments against a doctor involve liability insurance. Please remember your call, email, or text to the attorneys is free. All of us at Hollis, Wright & Couch want to help answer your questions on real issues you face. Remember, a competent lawyer will respond to each and every question that you send in. That's our pledge and promise to you, and thanks as always for watching The Attorneys right here on Alabama's 13.
Death and taxes, right? You know what they say, you can't avoid it. Welcome back into the Attorneys talking about taxes, our final segment. So a few minutes remaining for you to join in on the conversation here with Brad Howell.
All right, take this hypothetical. We've got a person out there watching the show right now that has not filed taxes for the last 2 to 3 years. They are gravely concerned that if they raise the issue, they could face some type of criminal penalty or jail time for doing it. What's your recommendation for a person like that?
For a person like that, I would say definitely you need to get on preparing those returns and get them filed. And the reason I say that is because if you're like most individuals, you've probably been employed and you've probably received some sort of wage earning statement. That gets reported to the federal government and they know that you had income. So the fact that you did not file a return is going to eventually, at some point in time, when they get around to reviewing your particular Social Security number, is going to trigger an audit and possibly an assessment. So you want to get this taken care of as soon as possible, because if you don't, interest and penalties are just going to accrue so long as there's a balance that's sitting out there.
Can we, I know that we can never assure anybody of anything on this show, but if they contact somebody like you to solve this issue for them, can you pretty much assure that we're not dealing with criminal issues? What we're dealing with is civil penalties, and it's time to kind of get current and make sure that from a civil perspective, people start over, kind of start anew, if you will?
Definitely, and having a professional there with you, whether again it be an accountant or a tax attorney, especially during the audit, because where most criminal investigations and criminal charges are brought is when an individual makes a statement to an auditor that can prove intent. Because at that point in time, they now have the evidence, they can move forward with the criminal charge if they want to. So if you've got a professional there that can kind of guide you through the process, let you know what to say, what not to say, and again, it's not a matter of simply trying to cover anything up, but a matter of making sure that the auditor is aware that this was probably just a mistake, whether it be negligence in filing a return or miscalculating what is owed, and to ensure that that stays at the civil level where they only have maybe civil penalties at the worst and no criminal charges.
Now, let's take this issue. I'm a small business or I'm an individual taxpayer. Either one is going through an audit and they're going to be meeting with an auditor. Do you recommend that they get in touch with a firm like yours so that they can get some legal advice and potentially have representation when they meet with the auditor?
Definitely. If you have someone involved from the very beginning at the audit stage, then you have a better chance of successfully getting the documentation and information to that auditor that they need to have. Otherwise, you have instances in which taxpayers, they don't like dealing with auditors. They don't understand why they're asking certain questions, and they may think that it's a personal invasion when in actuality the auditor is just following procedures and guidelines with the IRS that they're required to.
We got some good questions here. Let's try to buzz through some of them. What should I do if someone else claimed my children as dependents?
That is a common instance, partly due to identity theft concerns and partly due to maybe significant others that have a grudge with a parent of a child. The first thing you should always do is try to make sure that you file as early as possible each year, because the first return that is filed that claims those children will usually be accepted. It's only when a subsequent return tries to file with the same dependents, the same Social Security numbers, that it gets rejected or sent for audit. And if you are being audited, you just need to have all the information and documentation to prove that you can claim the children. Sometimes it may be beneficial to file a paper return as well. If you have a significant other that's claimed the children when they weren't supposed to and they filed an electronic return, even if you file a paper return after them, sometimes it will take precedence over that electronic return.
Okay, quickly, should I form a business entity solely for tax purposes?
I would say in general, if you're going to operate a business, you should have a business entity of some sort. It does offer you general limited liability protection in a legal sense, but as far as tax purposes, it's also very beneficial depending upon, and again, this is something that is particular to each individual circumstance. If you want the company to provide fringe benefits to employees or to owners, then you may want to organize it as a corporation as opposed to an LLC. So it all depends on the individual's circumstances, but generally speaking, forming a business entity is very wise for tax purposes.
Do you guys give advice on forming a business entity and how to do that process? Is that something that kind of spills over into the world of what you do?
Mm-hmm. Yeah, because there are a lot of tax implications depending on what type of entity you create. We assist individuals with choosing the entity that best suits their needs, and we walk them through the process of what forms they need to file. We can assist them with getting in contact with an accountant if they need assistance with those. And we let them know what type of tax obligations they can expect from anywhere from the local level all the way up to the federal government.
So if you're starting a small business, this is the guy you want to talk to from start to finish.
Yeah. Another question we've got on business entities. Can I ever be personally liable for taxes that my business entity accrues?
One of the purposes of setting up a business entity is to create a separate legal entity that will be liable for its own debts. And so usually, especially when you're talking about income tax, the business will be liable and the individual will not. But there are certain types of taxes which can be assessed to an owner personally, specifically withholdings for employee taxes as well as sales taxes to the state. If the business entity is unable to pay those taxes that are due, and they don't have equity or any sort of assets that can be collected upon, then a lot of times the department or the IRS is going to look to the owner of that business to try to satisfy that tax debt.
Okay. All right, a couple of minutes remaining. Time enough for a final thought. We've covered a lot of ground, but a final comment and a final thought from you.
Generally, I would say that anytime you're dealing with a situation like this, the best thing is to be prepared. Don't wait until an audit has occurred to try to get all your information and documentation together. Make sure you collect those records throughout the year. That's going to help you be organized in case you ever are contacted by an auditor. And especially when you're dealing with some receipts that can fade over time, you may want to scan those in and get digital copies of them, because both the IRS and State Department of Revenue do accept copies of any sort of original documentation as a legal copy of that. So you just want to make sure that you have everything organized. If you're the type of person that doesn't want to do that and you just hand all the documents to an accountant, make sure that accountant is with you at an audit, because if you don't know what these numbers are and how to explain it to the auditor, you need someone there who can assist you with that.
David, final thought. This guy and his firm, sure enough experts in this area. Surround yourself with the right people. I know it's intimidating to think that maybe you've made mistakes or you're being audited, and it's an intimidating process. That's why you get guys like this involved that can lead, guide, and direct you and hold your hand through the process. Contact us with all the ways that you can contact us. We will get you directly in touch with Brad and his firm and let folks use the benefit of those initial consultations to learn about what the costs of this are and how this process works and how they can lead, guide, and direct you through it.
Yeah, and the best piece of advice, take a deep breath.
Yeah.
Yeah, it's going to be all right. Get in touch with these folks because what you're facing is probably not as bad as you think, but be armed with information. We appreciate you being with us. Hope you have enjoyed this time together. You can call, text, email to get in touch with us, and we'll see you next week on The Attorneys.
Thanks for watching The Attorneys, sponsored by the law firm of Hollis, Wright & Couch.